Hello and welcome to the February 24th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Dentsply International, ticker symbol XRAY. This is a $4.9 billion healthcare company that engages in the design, development, manufacture, and marketing of dental consumables, dental laboratory products, and dental specialty products worldwide. After the stock had moved up decently back earlier in 2009, you can't really see the move up because we wanted to be able to focus in on this trading range, so I only included an 8-month chart. But XRAY had actually moved up pretty nicely earlier in 2009, and then you can see with this gap up here in late July, we simply went into a sideways trading range, and we don't know for sure which way this range is going to break. We could break to the downside, and we are looking at this as a possible long position, so you do want to kind of keep an eye on this 32 and a quarter area. If we were to fall below 32, especially if volume were picking up, I don't know that I would want to take too many chances here, so you want to keep a tight stop. But we are in this trading range and have been in this trading range now for over 6 months, going on 7 months, and we are at the bottom of the trading range. So the risk at this point is minimal to the downside before we break out of the trading range, and to the upside, obviously, if we make another move back up toward the higher end of the trading range, then we've got the potential of maybe another $3.5 to the upside. So pretty good risk reward on this one. But again, we don't know which way it's going to break, so this is not a buy and hold. We do trade, and if we lose support here around the 32 to 32 and a quarter area, we're going to want to be careful. Now I do like the positive divergence. You can see on the most recent low here, we put in a lower low and we had an equal MACD, and you can see the MACD actually just kind of drifting sideways to slightly higher. So it appears as though the momentum is slowing, even though we continue to move lower, and we've been trading below the 20-day moving average now for probably the last 5 weeks or so. It does appear to me that the momentum is starting to slow on the selling side, and that could bode well for another move up here on XRAY. So let's keep an eye on that closely. Now the Tuesday price action, you can see we had drifted back down very close to the low end of this range. We rallied back into the close, even though the market didn't have a whole lot of strength into the close. We did rally some, but we still had some pretty significant losses in the market. You can see that XRAY actually came back up and finished up 2 cents for the day, put in a hammer right around its 200-day moving average, and also did it with some pretty nice volume. So there are some signs here suggesting that in the near term we may see a pop-up here in XRAY. But again, I want to emphasize, to the downside, we want to watch this 32 to 32 and a quarter level, because if volume picks up and that level gives way, everything else I've talked about here really takes a backseat to that price-volume combination. So let's keep an eye on that. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.